But corporate America is in a lot of trouble. Where do you think corporations got the money for all these share buybacks? Most of it was borrowed, and a lot of those loans are going to come due. So it's not just the commercial real estate sector, but well, the banks are very exposed, and anything that was interest rate sensitive is in a bubble because we had interest rates at zero or practically zero for over 10 years. And so during that period of time, a lot of debt was taken on to buy a lot of assets. And because the interest rates were so low, people buying those assets could overpay. And so it was the low interest rates that helped to inflate the bubbles. That's the same thing that happened in the bubble that popped in 2008. And one of the reasons I was able to see it so clearly before it popped is because I recognized how Fed policy had inflated it. And, even before that bubble popped, I was forecasting the next one, which is the one that we've been living in for that entire decade. The only thing that's surprising to me is not that it's deflating, but that it took so long. But the current banking crisis is just another financial crisis. It's caused by the same factors that caused the last one, which is the Fed and its easy money policies, quantitative easing, 0% interest rates, except this time the Fed succeeded in inflating a much bigger bubble than the one that popped in 2008. And I think the 2023 financial crisis is going to be a lot worse than the 2008 financial crisis. And it's probably not going to end in 2023. It's probably going to bleed into 2024. Every segment of the economy took on too much debt. Now, obviously, the banks are very vulnerable because the banks own a lot of that debt. But corporate America is in a lot of trouble. Where do you think corporations got the money for all these share buybacks? Most of it was borrowed, and a lot of those loans are going to come due. So it's not just the commercial real estate sector, but corporate America that's in trouble. And Americans also have record debt. We have credit card debt, student loans, auto loans, mortgage debt. None of this debt would be anywhere near as large if it wasn't for how low interest rates were, because that's what made the payments affordable. But as interest rates reset, the payments become unaffordable. And the other problem is the buyers of these mortgages and bonds. I was pointing this out for years before Silicon Valley blew up, but I was warning about the impact this was going to have on banks and every other creditor when interest rates inevitably rose, and they would have to rise much higher than anybody thought because inflation would be a much bigger problem than anybody imagined, but that this would result in significant losses for the lenders. And we're just seeing the tip of that iceberg now. Sure. Now, they may have to reduce their overall volume because as you raise prices, you price certain consumers out of the market. But companies have to operate at a profit. So maybe some of the marginal customers will drop off in a lower volume business, which means that those companies have to start reducing their overhead to start preparing for a profitability with lower sales. And that's what's ultimately going to happen in the recession. A lot of Americans are going to stop buying because they're broke, but the Americans that still can afford to buy will just pay higher prices in order to keep these businesses afloat, because if a business can't make a profit, it's not going to stay in business. Well, I think that's a foregone conclusion. The question isn't, are we going to have a recession? The question is it going to be a depression? If we just get away with a recession, we're getting off easy. But I don't think there's any way that the payoff, or the payback rather, for over a decade of 0% interest rates and massive quantitative easing, I don't think we're going to get away with just a mere recession as a result of that. It's going to be a depression, and I think it will be worse than what is known as the Great Depression, the one that we experienced during the 1930s. And I think that the losses in banks will be a lot greater than it was in the 30s, not necessarily because the banks fail. They would fail if the government allowed them to, but because they're going to get bailed out with inflation. And because the government is going to have to print so much money to keep all these insolvent institutions afloat, the value of everybody's savings is going to sink. The dollar is going to collapse and inflation is going to run through the roof. Well, the point I made with the observation in that tweet was that but for the big jump in government jobs, the jobs number would have disappointed. because we created, I think, close to 50,000 government jobs. The private sector jobs were well below what had been anticipated. And my point is, this is not good news. I mean, if government bureaucracies are now even more bloated than they were because they hired more people, we're not better off because of that. In fact, we're probably worse off because they're going to make the rest of us less productive. And we have to pick up the cost through higher taxes or through more debt and inflation, as opposed to productive private sector jobs that pay for themselves. Because if a private company hires somebody, that doesn't affect me. I mean, I don't have to pick up the cost. I mean, the costs are paid by the business out of the profits that are being generated by that business and by that labor. So that's good if we have jobs created in the private sector. But when the government just goes out and hires people and I'm on the hook to pay their salary, I mean, that's not good news. Well, I don't think recessions are deflationary. In the short run, if you go into a recession, there is going to be some kind of pullback in consumer spending. And there may be some businesses that fail. And so as they're going out of business, maybe they'll have a sale. And so you could have some type of downward pressure on prices, maybe at the beginning of that recession as you're kind of entering it. But I think in general, economic downturns end up being inflationary in that what happens is that you have fewer people productively employed, and so you're not making as much stuff. But as the economy contracts, governments respond to that contraction by pursuing highly inflationary fiscal and monetary policy. They increase government spending, the central banks print more money to buy up government debt, they try to encourage more consumption, and so all of this ends up pushing prices higher. And if you look historically at the worst episodes of inflation, they always take place when economies are in recession or depression. You don't have runaway inflation when times are good, right? It's always a horrible economy, a basket case, with high unemployment that you see runaway inflation. And that, I think, is the environment into which we're headed. Well, no, you should stock up on it now before it's $1,000 a pack. Although, I don't know, maybe some of it gets stale. I don't know how long the shelf life is for chewing gum. I don't chew a lot of gum these days. But yeah, the point is that inflation is going to be rampant. I mean, that's just the way this is going to end up. There's no other politically viable alternative. I don't see the significant cuts to government spending that would be necessary to avoid much higher inflation. I don't see the Fed pursuing the type of monetary policy that would really be necessary to force the government into, making those difficult choices. I think all the factors are going to come down on inflation. They're going to keep on spending money. They're not going to cut anything. Everybody's going to get paid their Social Security benefits and their Medicare benefits and their pensions. The problem is the money's not going to buy very much, because if you need $1,000 to buy a pack of chewing gum, I doubt your Social Security benefits are going to keep pace with that. Even though they do have these cost of living adjustments, they're not going to capture anywhere near the degree to which the cost of living is actually going up.